Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, April the 11th, and want to take just a brief moment to discuss what markets did last week in the equity in the markets and what stocks did last week in the marketplace. So it was a down week. We did get a down week in the equity markets with the S&P 500 down 95 basis points or down 0.95%. The mid-cap index was down 2.02%, and the small caps, as measured by the S&P 600, those were down 2.7%, and those were down in advance of this week's CPI report. And when we got CPI yesterday on Wednesday, it did come in 1/10 hotter than expected, both on a month-to-month and a year-over-year headline basis. And so you saw CPI at 3.5%. And one of the things that I wanted to talk about is what we've really been discussing here at River Place is that we really believe that inflation is going to get really sticky around here, and that it's going to be very challenging for the Fed to get the inflation rate all the way down to their 2% target for a myriad of reasons that we've been discussing. So we move forward to today, and we did get producer price index today, which is what companies are paying for goods and services, and that came in less than expectations. While still higher than the month prior, it was still less than expectations. And so you can see maybe some pressure will be waning there, but there were expectations of the first rate cuts by the Federal Reserve Bank to be in June, and that was about 50-50 going into this week. Well, that has been pushed all the way to September now, that you're more than likely going to see your first if you see a rate cut from the Fed. So I wanted to take just a second to discuss why rate cuts why having zero rate cuts would not necessarily be a bad thing. Lower interest rates sometimes also signal a weaker economy. The reason why inflation is being sticky around here and what we see happening is we see a very, very strong and accelerating economy that's really doing great. The key driver here too is that wages are finally outpacing inflation, so the consumer has more money to spend than the cost of the goods going up, which allows for the economy to continue to move forward. And if we just bludgeon the economy to get inflation down to 2%, you see a bunch of increase in unemployment, and you slow the economy down, well, was it worth it just to get to an artificial 2% target rate? So what we see is historically at 4.5% or 4.55, where we sit currently on a 10-year treasury, well, that seems high compared to where we've been for the past 13 years. Historically speaking, it's still relatively low. The other thing that's really, really important, that's really been driving markets over the last couple of weeks, is we've been in a quiet period where we're getting ready to get into the throes and the heart of earnings season, where companies and corporations are reporting their earnings growth on a quarter-to-quarter and year-over-year basis. And so what we really believe is that earnings are going to be good and they're going to grow, and we can fade the Fed for a time where that takes front stage during the quiet period. So what's important about the quiet period is corporations cannot speak about anything that could move their stock. So you have not a lot of news in the corporate world. So when that happens, you have speculation running the market wild. Is the Fed going to cut in June? Is it going to cut in September? Are we going to get one cut, three cuts, no cuts? And the market, you see the volatility pick back up in the market. But the fundamental driver for the equity markets to move higher and to trade at higher multiples is the fundamental earnings growth that we're going to hopefully see this quarter. So we will be sitting on our hands waiting for, in anticipation for this earnings season. We get the big banks, some of the big banks on Friday, but a lot of earnings next week and the week after that. So stay tuned for what we see and where we see markets moving from here. But as always, if you have questions, give us a call. We'd love to talk to you. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thanks so much for watching.